Welcome to TradeTheMBA.com. This is John. This report is for the 3rd of May, and well, we can see more pausing going on. And what the idea behind this is, as I mentioned back when we had the nice move up, we were in a real deficit of shorts here, as we can see by the cyan moving way lower. And I said it takes an awful lot to push the market higher when it's just buyers. Now we're approaching the 4th, which would be traditionally where funds start to receive money going into the weekend that's coming up. And what do we have? A nice rise in short activity for the first time as they start to smell blood with all the negative news out there that's suggesting things are, falling apart, blah, 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 blah. That's a perfect sign. Now, interestingly enough, though, you do also see the orange right here. If it crosses below, that typically is bearish, but you also have now a reset of steel, short-term buyers, green, mid-term buyers, and it's not going to take much on a turnaround. We're not oversold by any stretch of the imagination, so it's not like there's been a huge movement as far as selling or strong activity that way. So modestly, it's beautiful to look at those ABM values because that's likely where we're about to see any kind of support. And then it's just a matter of looking for the intraday because with the amount of increase in shorts rising, it's just another explosive opportunity to continue to propel it. And like I mentioned before, you go back and look at the charts from the mid-90s, early 90s, it was just a slow onslaught of never-ending and just tiny retraces, and it drove people absolutely nuts because they couldn't wrap their head around it. And if you're looking at a market from a broader perspective and you're seeing the potential for significant growth in that, you've got to price in inflation in that, and you do it ahead of time. You don't do it after the fact. So I know it's hard for people to grasp, because they all want to look at the EPS, blah, 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 and they think everything's overbought, yada, yada, and it misses the boat. So don't get caught up into that stuff. Just follow where we're at with the readings. I mean, when you look at this NASDAQ, there's been no question on this breakout move from, all the way from before when we had the crossover here, the green, and it started, and it's just been pretty clear. Now, even with this, you've had short-term buyers completely fading off this with a continuation rise. So when it turns around, there's plenty of powder to continue to propel things. Euro staying at the mid-size higher in the range, that supports the S&P. A higher euro is definitely good for the S&P, as well as the NASDAQ. Both of them benefit from it. Bonds are going to continue to struggle within this range. Nobody really is quite sure what the Fed's going to do, and I think the market is generally suggesting that rates will go higher. It's not necessarily what the bond market is pricing into it. This is kind of a interesting diversion. Oil, it's pretty obvious where this is going. As much as they talk about it, this technology is a phenomenal thing, and it's going to continue to put downside pressure as their efficiencies just keep going up. I mean, their ability to produce now is just through the roof. Now that will change if you actually see economic growth, because that will actually draw supplies down, and at that point you'll actually see a turnaround in it. But nothing's been passed, so right now the optimism is there, and it's pent up. It's just pretty soon you're going to have to see the practical aspects of it. Now, a lot of that deregulation, as far as some of those regulations that have been rolled back, and that is going to take its effect, but it's going to be last quarter of the year before anyone starts to notice any difference in those aspects of it. So unless there's actual tax cuts and or stimulus, it's just a pre-buy. Everyone will be selling the news at that point. It'll be old. Gold, getting to our oversold point, we should see a number one pop up here if the red DOC goes below that negative 13.5. But again, easy enough. 120.28 is your turnaround point at this point. Here was the ES, very choppy day and very small volume as far as that. It's the same as the other day before. Ended up with a lot of DOC spreads that came through here. We never really, all the little buy opportunities, never saw a cyan dip below red through any of it. And each time you had the steel cross below, foretold the sell signal. And I pointed out that I was short coming through this, and it's been just fine. So we'll wait for a turnaround when it happens. But until then, play what is. And currently, we're just in a soft spot, waiting to see some of that money come. And when it does, it'll turn around fast, because once that short covering starts, and I wouldn't be surprised to see it happen as a gap, that's really the best way to capture shorts. They get the low liquidity in the European session, and they're able to drive it. And by the time people wake up and see it in the West, it's already escalated to the point where they're in trouble. And then they hope that there'll be a retrace at some point in the day, and that doesn't happen. And then as the end of the day comes, they have to start covering, and things just get crazy. And that's played over and over and over and over again. And it's the exact same thing is done to the reverse side as well. We see it build up from the buying gets too far, and you get the exact opposite reaction. But the propensity has been to the long side, and we know that. So no question overall with the general perception of the market, but in this particular point, we're just in a soft spot. So that's how we're going to look at it for now. And you can see it's reaching all the way down to that target as we speak. Trade well. We'll talk again later.